Should you rent or should you buy? These are questions I get all the time. So let's get started. Should you rent or should you buy is both an affordability and a lifestyle question. So let's take a look at the financial aspect first. Whenever you're considering buying a house, it's really important to have a good handle on the numbers. So I put together a little on-screen share here for you, and we're going to go through some numbers. So without further ado, let's get started. Most of the national economists, they work with the numbers that actually HUD gives them for the rent information. As far as the single-family home sales and those prices, those come from the local MLS directories. But I wanted to compare for you what we are going to be looking at in terms of, is it better for you to rent or is it better for you to buy? So I'm here at the main screen of HUD, and I want to show you where you can go to get this information. So what you do is you go here to resources and you click here on fair market rents, and they have all of this information by year, but we're just going to look at 2020, and we're in the beautiful state of Massachusetts. And then we're going to be looking at Essex County. Now you can do this for all counties. And I know it says Amesbury there, but I did check the numbers. So it is for the whole county. So today we're going to be talking about 3-bedroom and 4-bedroom housing opportunities, because most likely you'll probably buy a 3-bedroom or 4-bedroom. I wouldn't recommend buying a 2-bedroom or studio or 1-bedroom home. I don't think I've ever seen an efficiency home, but this information is good if you're comparing a condo. So, but I wanted you to see this is what the average rental rate is that is compiled by HUD. So the 3-bedroom, you're looking at $2,800, and the 4-bedroom, we're looking at $3,000. So what does that mean? So what I did was I put together a really boring spreadsheet for you, but I just want you to see what is happening here. So let's go through these numbers, and then you can see how it will impact you. So the first thing is if you're thinking about buying a house, I just picked a property value of $380,000 with 20% down, means you would have $76,000 to put down. Your loan amount would be $304,000 with an interest rate at 3%. This is assuming that you have excellent credit. If you have a lower credit, you're going to have a higher interest rate. So at 620 credit score, you're probably going to be around 4.5% in today's current market. A loan term of 30%. When you put down 20%, you do not have to pay private mortgage insurance, And then I just picked a ballpark number of $7,000. It's not on the low end and it's not on the high end. And then you will have home insurance, so you will have to insure your home. And I did put it a little higher than normal just because I always like to err on the side of caution. So the principal and interest for this scenario is $1,200.81, which is substantially lower than the apartments. However, that doesn't tell the whole story, right? Because you have to pay your taxes and your insurance. So the total monthly payment is $1,900, but that still is less than the 3-bedroom and 4-bedroom apartment. I'm just going to throw this back up on the screen real quick. You can see here, see how it's $2,800 and $3,000, and we're talking about a total of $1,900. So that's where this down payment really helps you. Now what I want to show you is this is the same scenario, same prices, but you have no money down with your loan and you have a higher interest rate. When you, as I mentioned just a second ago, you have to pay private mortgage insurance if you don't have the 20%. So, and your interest rate will be higher. So that's what the $1,200 is for. So your principal and interest is closer to $1,900. Then you have your PMI, your taxes, and your home insurance. So you're at $2,700. So again, here we go. Let's take a look. 3-bedroom, just under the 3-bedroom, substantially under the 4-bedroom. Let's keep going. This doesn't tell the whole story. So in the MLS, our MLS is fantastic, by the way. We can access amortization schedules. So the federal government requires that you pay part of your principal down on every single payment. So this is an amortization schedule of the $304,000 loan, and this is the $380,000. Now it's not the total monthly payment. See, it's just the principal and interest. $1,281.68. Your interest is $760, and your principal is $521. So when you add all the interest up that you pay for the whole year, January through December, you come up with $9,000. Your total debt that you've paid is $15,000, and the principal that you paid down is $6,000. If you look over here to the $380,000 with no money down, you've paid a total of $23,000, with $16,000 is your interest, and then your principal is essentially the same, about $6,000. Now, how much would your income need to be in order to get this type of a loan? So I ran some numbers here, and for $85,286, let's say that's your salary. Uncle Sam says, thank you so much for working so hard. Now we are going to tax you for all of the great services that we have in this country, and we do have a lot of great services. So under this scenario, for $85,000, I took the single filer because they pay just a little bit more than filing jointly. If you're married and you file separate, it's a little less than this, but let's do worst case scenario. So here's the income tax that you would owe. It's $14,000. Now you paid $9,000 in interest to the bank. This is what is tax deductible. So we're going to deduct that. And then you get a nice little bonus here. For your property taxes, you get to deduct that as well. So that's this number right here. Now in the state of Massachusetts, you are able to deduct part of your state tax that you've paid. Our tax rate is 5%. So I just did a generic 85,000 times 5% is not 3,000. I'm going to explain this in a second. So the federal government limits you as to a maximum of $10,000 deduction for property and state tax. So I just put it as you have your property tax and then you have your state tax capped out at $3,000. So in this scenario, as a homeowner, you're actually paying less, almost $4,000 less in taxes. Now, if you're renting, remember we talked about $2,800 times 12 is $33,600. Your federal tax is going to be the same, right? I mean, because your tax standing isn't different just because you're a renter. Now, you don't get to itemize here. So what you're missing out on, $10,000, and that's $20,000, but you get a $12,200 standard deduction. So you would then be paying as a renter, you're going to be paying $36,000. So that's the difference, as you can see. I'm sorry, it's not a tax, it's just that this is what you would be paying because you're never going to see this rent back again. So it's kind of, I guess it's sort of a housing tax, but it's not really technically. So let's go over here and look at the $380,000 with no money down. So because you need a higher income, you're going to be paying a higher tax. Your interest that you pay to the bank will be higher because you're not putting any money down, and you can run those amortization numbers. And then it would be consistent as if you were putting 20% down. You're going to be capped at $10,000, but you would then still be not paying as much tax, close to almost $1,800. We'll call it $1,700. And then to compare, again, here is, I just want you to see that these are consistent numbers here. And the federal tax would be different because your tax rate is different on the $119,000. So you would still get your standard deduction because you wouldn't be able to itemize. So now your total cost of living is $50,000. And to me, I would rather put that money towards myself than towards the government. But that's just me. You know, you get to decide what you want to do. So I wanted to give you some other numbers just so you could compare a little bit. So I used an example of $500,000. We have the 20%, so you have a $400 loan amount, a 3% interest rate loan term at 30, no PMI, $7,000 for property tax, home insurance is the same. Principal and interest would be $1,686. Now, this is really fascinating. Look at this here. So your principal and interest for $500,000 is $1,686, right? Here's the number right here. And when you just bump over to $380, it's only $400 difference, really, maybe $5. But the difference is in how much income you need in order to qualify and how much money you need to put down to purchase the home. So, but let's keep going. So the taxes are the same, and then you would have the insurance. So your total monthly debt would be $2,394, so almost $2,400. If you didn't put anything down, again, you have to pay a little bit higher interest rate. So these numbers are all going to be the same as we just discussed. And then you get to $2,533 with a total debt of the loan, because of the way you structured it, would be $3,341. Now let's just remind ourselves as to $3,341 is just a little more for a $500,000 house. And a $500,000 house around here is really like fantastic, beautiful, gorgeous. So you can see that those numbers really do work to your advantage. Here's the $500,000 with $100,000 down, and you're at $2,390. Oh, let's call it 24, and you're right here. You're below what you would be paying in rent. The hard thing about doing a 3 and 4 bedroom apartment is that there's not a lot of them. So let's just finish this off here, because I want you to see what your tax savings will be. So here's the amortization schedule. Once again, consistent payments. You will pay for a $500,000 house at 20%. You'll pay about $30,000 for your payments, $11,000 in interest, and $7,000 towards the principal, almost $8,000. You need $102,000 for your annual salary. Then you would be able to purchase a $500,000 house. Now let's just go down here a little more. Let's take a look at the taxes. So here we go for $102,000. What Uncle Sam is going to want you to pay is $24,000. Now the interest to the bank, because you get to itemize, you get to do all of this here, $11,088. Now again, I told you I round up, so here's $11,886. $7,000 for property taxes. We have to cap it at the total of $10,000, so there's 3 there. So you're actually making out here where you're paying $2,700 to the federal government. Now, how could you get around this a little bit? Now, check with your tax advisor, please, because I'm not an accountant. But when you itemize, you're able to deduct medical up to a certain amount, and you have to qualify. There has to be a certain amount that you spent, but also for charity. So if you have some special charity, I can think of several in this area. If you want to donate to that, you could essentially lower your tax obligation. And then we want to compare how the homeowner makes out versus the renter. So see the difference here, 2,700 versus 51. And I kept these numbers the same and consistent so that we're comparing apples to apples. Finally, for our last scenario, because we're not putting any money down, you're going to pay a higher interest rate. And then, of course, your mortgage payment will be higher because you don't have any skin in the game. And then you have your tax obligation, or I'm sorry, this is your payment. So here is, you're paying $30,000 here, and look at the difference. You're putting $100,000 down in this scenario, and you're paying just under, well, I guess it's about $2,000 less annually here for putting $100,000 down as opposed to here, which is real interesting. So again, here's the interest. Now look at this. This is $22,000 you're paying. This is almost double this. So you'll have to decide what your lifestyle and your financial situation really would seem to dictate. Now, I don't know if you can get a $500,000 loan. I'm just showing you the different scenarios. You have to talk with the banker, and it's very complicated in terms of what banks are willing to lend you and what they're not willing to lend you. Everyone has different underwriting regulations, and some banks will take more risk than others. So in this scenario, you would have to have almost $139,000 salary. So just over $11,000 monthly salary. Again, this is gross. So if that is you, then this is the type of income tax that you'll be paying on that. So here it's 33. The interest to the bank again is 22. This is where I get this number. And then you have the 10,000. And now here we are again, $1,000. So you might have a charity, or you might, have medical expenses. Perhaps you have a family situation that you're dealing with. So now let's compare it to the renter. So here we are at $33,000 again, and we've got a total housing cost after taxes. I just want to make sure this is right. Yeah, so you're looking at $61,000 because you have to pay your rent, you have to pay your tax on your income. You cannot itemize. You get the standard deduction. You're looking at the difference between $61,000 in difference to $1,000, and here $51,000. What really varies is what the bank will qualify you for, and that's where these salaries make such a big difference. If you have two people that are buying a house, then you may well be on your way to buying a more expensive home. So what does that bring up? That brings up our lifestyle. What do we like to do on the weekends? How long do we want our commute to be? All of those different things. So I was an urban planner, as I mentioned in some of my other videos, and I love this website. I always direct you to third-party sources. I don't want you to feel like I'm selling you anything, but I wanted to show you something here. So this is massstats.com. I highly recommend you go here. It does this for the whole state. I'm just going to zoom out here just for a minute so you can see it. But as I mentioned, I lived in the Route 2 corridor for a long time. I serviced this whole area, and then we moved up to the beach, which I just absolutely love. I grew up at the ocean, so I'm so happy to be back again. And we do service people that are moving from this area to vice versa. There's actually a lot of transition between these two corridors. So this website, as I mentioned, it has all kinds of things here. Now, one thing I want to point out, some things real estate agents are not allowed to talk about, such as this category right here. So that's why I direct all of my clients and potential clients to this website. So you can poke around in here and you're going to get so much information. Additionally, if you are thinking about some of those lifestyle things, I have a great tool that I love to give all of my clients, as I mentioned, and potential clients, a lifestyle worksheet. And we really go through your whole life. The worst thing I see is that people run out to an open house, which you shouldn't probably do, because the listing agent is representing the seller on all fronts at every stage of the game. So I like to start out with thinking about what kind of a home and community do you want to live in. And then from there, you figure out what kind of house is available to you and what your income and what kind of disposable income you want to have for the rest of your living, because you want to definitely enjoy your life. I hope this analysis has helped you, and if you are looking for a real estate agent to help you find the perfect place to call home, I would love to help you. I'm Julie Marion with Huddle Real Estate, where we buy and sell every home as it is our own. Make it a great day.